Hello everyone, Alex Winkler here with a new trade review. In this video lesson, we're going to be reviewing my XRP swing trade. There's two reasons I want to talk about this trade. One is because it was one of my biggest gainers with crypto trading so far. And two is because I think we're going to be seeing a lot more of these chart patterns soon in the next coming weeks or months, depending on when this bear market kind of comes to an end. Anyway, we're about 80 to 90% off our highs, depending on what what coins you're looking at. So that's a pretty good indication that we're reaching, a potential bottom. But there's no, I'm not trying to predict a bottom or anything. We could be going much lower. But I do want to be ready for when we do hit that bottom and we're going to start seeing reversal. So that's what we're going to be focusing on in this video lesson. All right, let's dive right in. So I documented a lot of the reasoning behind this trade. You could always read it over here. I don't want to kind of read it verbatim, but I'll just dive right into the chart patterns and kind of start talking about it. Then I'll kind of see if there's anything I missed that I really wanted to review. So one thing I do want to point out is I did get pretty lucky on this trade. We were in a full-blown bull market, and I was looking for a simple, stair-stepper pattern breakout consolidation. But as I saw that we were going into a parabolic chart, so basically means each breakout gets a little steeper than the next one, I decided to keep averaging in my position instead of taking profits, which I usually would do, especially in the market we're in. If you've noticed, all my investor trades have been super short term. None of them are averaging down. They're all just short swing trades, sometimes even lasting a day, because I just don't trust the market we're in right now. But this was a trade I got fairly aggressive on. We were in a very nice bull market. Everything was going up. It almost didn't matter what you held. So that's what I mean. I did get kind of lucky on this, but ultimately I was just following a pattern that I talk about all the time. And this stair-stepper pattern, I definitely want to point out, it was forming the parabolic chart pattern. And if you don't know what that is, just do a quick Google search. Like with anything, you'll probably find the answer fairly quickly. I mean, the first image right away, you could kind of see what I'm talking about: stair-stepper, consolidation, another breakout, consolidation. And this was about the times I was averaging in. And then we had a full-blown, exponential chart pattern with this curvature, and this is almost exactly what you'll see with Ripple. Unfortunately, I didn't document this trade like I'm doing now, because as of 2 months ago, I created this website, so every trade gets documented before, during, and after. Everything is posted in the chat room. You guys could always check it out here. So that's pretty fun. There's also the investor chat room for these kind of trades. And everything is much more, I would say, reviewed, so it's really helpful to learn from. Thankfully, though, everything was imported to CoinTracking.info, and that's what kind of gives me a bit, gives me the ability to review this trade in hindsight, and that's pretty important. So I'll dive right into it. So I actually bought this trade with my investment fund, so the Enzo Crypto Fund, and then my personal fund as well. And the reason I did that is because the personal fund is long-term and the crypto fund is short-term, and this pattern kind of fit into both. And you'll see that the short-term pattern, so this was the short-term one. I was buying into the breakout over here. I didn't, and then this short-term, this usually day trade account, I actually ended up holding because it just constantly was showing new highs and the parabolic chart pattern was going off. So this was really nice. This still was about a week-long hold, so basically a swing trade, and I sold into the breakout after this level right here. So that kind of shows you one of the accounts. And the second account I wanted to talk about was the investor fund. And here you can see much better of how this whole trade played out, and also why I follow USD instead of Bitcoin as a denominator. So basically, XRP to BTC, I do XRP to USD because for me it makes a lot more sense. I can read the chart much better that way. What I saw here was a very nice kind of consolidation holding its highs, and this was around the time I started the fund as well, so it was really good timing. But if I was only looking in Bitcoin, I would have saw a whole different pattern, right? This is kind of a downwards trend. This is actually a pattern that I completely avoid if I was looking at Bitcoin, because this downward trend is, is extremely bearish, and I don't like that. But if I was looking at a USD chart, I really like this. I'm looking for a breakout of this level. So I was averaging in constantly, and once there was a breakout, I remember this point I was really thinking about getting out, but we were in a market that was very bullish, and when kind of everyone is talking about something, you know that we might be reaching the high soon and it might be time to sell. So we were just getting into that. So I started averaging in on this consolidation again, broke out again. I bought on the breakout here, and then I rebought on a breakout. It was intraday. And then I kind of just held. I didn't really know how far it was going to go, so I kind of held, and I was waiting for a sign, an indicator of some sort of crack, and that's what I sold into. So once you see, it's kind of hard to see here. We'll have to zoom in a bit more. I have the chart open on a different screen, so I'll show you guys that in a second. But you can kind of see here in the longer term that there was a major crack here. This also happened if you zoom in a bit more. But basically, when you have that nice, stair step or breakout consolidation pattern, and then one of the candles goes completely and breaks it, that shows you there's a little crack. And that crack kind of is a red flag to a lot of traders. It means that the run-up might be coming to an end. Another thing I actually talk about a lot is another way to find the end. And although I don't really like fundamentals, especially in a bull or bear market, because they kind of go out the window, when near the highs, XRP was actually valued at 1/5 of the market cap of Facebook. And I'm sorry, these companies are, when it comes to fundamentals, are completely different. Some people call Facebook a startup, but XRP is really a startup. I mean, they're your typical, I guess you could call Silicon Valley pre-revenue company, but pre-revenue. So it should not be on the same playing field as Facebook. So that was also a fundamental indicator that it was completely overbought. That being said, fundamentals at this part kind of go out the window, because you could probably have said the same thing easily, anytime building up to that as well. And right now, we've been in a bear market, and for the last 7 months, everything has been going down, although the projects have fundamentally gotten better and better. So that also doesn't make sense. So there's a little bit of why I like technicals so much, because technicals, to me, tell you a lot more about what the price is doing, and you can kind of get a better idea of where it might go based off simple patterns. Is there anything else I quickly want to review? Let me quickly check. Okay, so here's a chart. This is with our Enslow account on CoinTracking.info. It's quite nice. You could just go to your exchange, API, import all your information, and it's super quick and super easy. And then you get a nice chart like this. Now, when you're day trading, these charts don't really work anymore, and this is why I have migrated off of CoinTracking.info for my documentation. I still use CoinTracking.info for all my accounting, for tax season and stuff like that. They have some really good stuff, and they have some nice account overviews, but I don't use it for this anymore. So guys, that's basically it. The main thing I want you to take away from this video is that keep an eye out for these parabolic chart patterns. Now that we're approaching the end of the bear market, we're going to start seeing charts like this more often. Just like if you zoom in here, you can see, there was a little initial breakout over here, and then consolidation, and then, breakout to new highs, same thing, breakout to new highs, consolidation, and then another stair stepper pattern that goes exponential. And now we're kind of going to the former high level, and we've been seeing a lot of consolidation. I'm not saying it's going to happen next week or maybe even next month, but it's something to keep an eye out for, and that's the important thing about this video that I want you guys to take away. Also guys, if you're just getting into trading crypto, definitely check out the site. We have a 5-day course on how to get started trading that you can go here. It's all free. You don't even have to be logged in to access it. Just go to course, and then select the day you're on. We have the 5 days, and we have the whole thing uploaded on YouTube. Also, we have the trade journal, where you can start documenting all your trades, just like I do. Fairly simple. I actually review this, I think, in day 2 pretty extensively. And if you want your copy, remember just to go to tradejournal.co, and you can download it there. Or actually, you don't even have to download it. It goes right to Google Sheets. So that's all you have to do. Cool guys, that's everything for now. If you found this video helpful, please subscribe, give a like, and if you have any questions, leave a comment below. I'll be super happy to get back to you. Ciao, ciao.